What's going on, everyone? Welcome back to the Futures Trading Accelerator program. In today's video, I just want to explain what initial margin and what maintenance margin is and the differences between the two and what you need to know. So futures margin, of course, futures is a super highly leveraged product. It is, you can see right here, you can put on one ES contract for as low as basically $1,200 for intraday, and you would be controlling over six figures worth of notional value in the stock market. So yeah, it is a very highly leveraged product, and you need to understand what futures margin is so that you don't get liquidated and over leverage and just blow up your account because you were just taking crazy size. So right here, intraday initial, that's how much you need to put on a position from 9 a.m. Through 4 p.m. If it's from 9 a.m. through 4 p.m., anytime in there, then you'll be able to put on a position for $1,200. If it's outside of that time, so basically 4:01 to 8:59, then you'll have to pay, or just have $12,000 in your account at least to put on a position, just one contract of ES. So that's for the intraday initial and the overnight initial, whatever you want to call it, because TradeStation is a discounted margin rate broker. So you can see right here, intraday rate is 10% of what it actually would be, which is pretty cool because you can get access to more leverage, but you really don't need to use much more leverage than just regular what you should. And yeah, so that's for initial. For intraday maintenance, that is how much you need to maintain in your account so that you don't get liquidated. So again, that's all I'm saying. Don't over leverage, because if you only have, let's say, $1,300 in your account, you take one ES contract, it would take not even 5 points of drawdown and you'd already be liquidated, and then you wouldn't be able to put on any more positions until your account balance gets above $1,200, so the intraday initial. And again, we're only going to be doing intraday trading outside of 9 a.m. to 4 p.m. There's really no point. Again, the moves just are not that great. There's not a lot of volume, and you really just don't need to be doing that. And again, the margin rates are way higher, literally 10 times higher. And yeah, so that is for intraday maintenance. So basically, that's just the amount that you need to have in your account per one ES contract that's open. So for this, it would be basically right around $100 of drawdown that you could sustain for one ES contract, which would be 2 points. So you need way more than $1,200. I would say at the minimum like 5,000. I would say $25,000 per one contract traded with a 5-point stop loss, because that would be 1% risk per trade. But you don't need to have a full 25,000. If you have $25,000 total, you can just put 5,000 in your trading account and keep the 20,000 in your bank to keep it secure, because you never know what could happen if you accidentally open a position, you don't realize it, and then you just get totally stopped out, and you just don't need that extra risk. And if you know that you have another 20,000 that technically could be used in there, just sitting in there, then just keep it safe in a bank account and only have maybe $5,000 in your trading account per $25,000 that you have. That's my rule of thumb. That's what I do. But yeah, I hope this helps. It's pretty simple. Just have more than the intraday in your account per contract, and just follow $5,000 per one contract. That should be really easy. So then you don't even need to worry about how much you actually need to put on that position. And then for the maintenance margin, again, just don't go too crazy, and you really should never have to worry about getting margin called And yeah, that is the difference between the initial and maintenance margin. Hope this helped. And if you guys have any more questions on this, just, comment down below or DM me on Instagram. And with that, have a good rest of your day and see you guys in the next one. Peace.